Hey guys, welcome to Vinel TV. If you are new to this channel, and if you are, please consider subscribing. I hope you are doing well. I just want to say massive thank you to those of you guys who have been subscribing to my channel. I appreciate you a lot. Thank you very much. It helps us to go. It means so much. We are here to give value, to give back to the community, to support people by making informed choice, by giving people idea and skills and education. You know, what I'm gonna tell you is something that is so dear to me, is something that is helping me. You know, I'm not a financial advisor, but it's something that I want to share ideas with you, something that is I've done and things that I'm doing, you know, in terms of helping me generating financial income, but also helping me to generating passive income. So in investment, right, I received this question on my channel. It said, thank you very much, although I have a question. Do you do day trading or hold share over a period of days before you sell, and which is better for beginners? So this is the question I was asked, right? The question I was asked is, do I do day trade, you know, or hold share over a period of days before I sell it? What is the best? What is better for beginner? I just want to say, really, you know, it is up to the individual, right, for you to know the reason why you are investing in stock market. Are you investing in stock market as a day trader just to get money or make money and chicken out? Are you investing in stock market just to make money, quick money, and move away? You know, or are you there in the long run? It really ups. It depends the type. So you need to search. You need to find out the type of investor you are. You need to find out the reason why you are in the market. Are you there? You know, you need to find out the reason. You know, whether the type of investor. Are you value investor, right? That you want to invest so that for capital appreciation, but also to receiving passive income, receiving dividend. You know, the reason myself investing, I'm not speculating. I'm investing because I know investing in that company, I'm part of ownership. I'm part of the owner of that company. Okay, I'm not in the market just to invest right now to make money and chicken out. No. So that is by the way. So what I want to explain to you, what I think, you know, what I'm doing that is helping me. I invest in stock market to receive a passive income. That is the ultimate goal. Also to build a financial wealth, to build a generational wealth for myself, my family, and my loved one, but also to be able to help the community. Okay, in terms of decision I'm making, I'm not investing right now just to make quick money. No, that is not my principle. That is not who I am. Okay, but one thing I want us to understand is what day trader is. Basically, day trading is defined as, is pretty much you are a speculator. You're speculating. You are buying share right now and have a feeling that it will go up in next 1 hour or 2 hours, and for you to sell it. The question I want to ask you, what if it goes down? What if it goes down? Because you know there's a volatility in the market. Market goes up and down. It goes with the news, right? So if you buy a share now, or if you borrow money and buy security, you buy shares. What if it go down? You incur loss. Okay, but either way, it's up to you really for you to make informed decision, decide the type of investor you are. I'm echoing this, saying it up and down loud and clear for you to understand, right? A day trading, you might incur loss. Okay, that is day trading is speculation in security, whereby buying and selling financial instruments within the same day. you buying and selling financial instrument within the same day, you know there's so much tax. You know, there's a lot of commission fee you need to pay buying and selling share on daily basis. So you need to make sure that you cover all the commissions to the stockbroker, to stock exchange. So if I check out, if I show you, if you buy a share, you know there's a lot of payment you need to make that is actually not included in terms of, you know, you need to pay commission, you need to pay stockbroker commission, you need to pay payment to Nigeria Stock Exchange. You know, you need to, there's so much payment you need to make in terms of buying one share. Okay, so what I want to actually explain to you is, are you investing, right, that you want to generate financial freedom? Are you investing because you want to make money right now, or are you investing, you know, for long run? Myself, I am investing for the long run. I invest because of I want to receive a passive income. I want to receive a dividend. This is the main reason I invest in a dividend paying stock, or the stock that I know that will appreciate for capital appreciation. I'll give you an example, right? The dividend I receive, I'm giving you another dimension. The dividend I received in 2019, I received dividend from different company in 2019. Okay, I'm telling you as in Naira, I received 18,371, 13,000 on different date from different company. I wrote it down here. I received 35,000, 90,000, 100,000, 28,000, 200,000. These are different I received in 2019. Now this is the dividend I received in 2020 from various companies that I invested in. And the payment these companies make, or the dividend they declared this year, are actually higher compared to what it was, what they declared last year. So my idea, the way I invest is I invest in dividend paying stock, that company that I know that I know the principle, I know the fundamental, I know I've done the technical analysis for that company, I know their management inside out, I know what they are producing before I venture, before I invest in that company. I invest in the long run. I don't invest just for me to do a day trading. I don't think it's a good idea for me, but it might be good for you. Don't get me wrong. It's pretty much like you are going to a journey. You and your mate are going to a journey. Okay, you are driving 130. If it's in UK here, you are driving 130 miles per hour. Okay, and driving 130 miles per hour, 130 miles per hour. Okay, and your mate is driving 65 miles per hour. Okay, you are driving 130 miles per hour. Okay, and you're driving 130 miles per hour. Traffic light, you are breaking the law already. Breaking the law. You might lose your license because national speed limit here is 70 miles. You might be caught by police and get fined. You get penalty point. You get penalty point on your license. Okay, so driving 130 miles per hour for you to reach your destination, you are breaking the law. You might be caught by police and fined, or receive a penalty point on license, or even lose and go to court, or even lose your license and go to court. Okay, this is an example I'm giving you. Then your mate is driving 65 miles per hour and driving there slowly, nice and slowly, and reach to their destination. Safe. Okay, and reach to that destination safe, without any issue with authority, without any issue with the police, without losing his license. Just he reached there. JJ, I mean, is a kind of Nigerian terms. Okay, it means you reach there safely without any issue, without any problem. You reach there with peace of mind. So investing, day trading is pretty much like you are speculating. Okay, you are speculating, and you are driving 130 miles per hour, breaking the law. There's a chances you might crash over here. There's a chance you might crash driving 130 miles per hour. But if you take it easy, driving 165 miles per hour, you are driving slowly, so you having an accident, you are eliminating having an accident because you are careful. Okay, and one thing you need to understand is, because there's a volatility in the market, and investing is a risky business. Investing is something that you need to understand. There's a risk there. Risk, even if you are buying and selling, there's a risk. You selling share to someone, there's a risk. The risk there is that share you sell to somebody, maybe okay, $2, okay, right, might go up to $5 in next minute or next 2 minutes. So you already run the risk. You already lost there because you sold it so quick. Okay, so you bought this share, okay, for $2 and quickly sell it to $5. No, you sell the share for $2, or maybe you bought this share for $1. Okay, $1. Okay, and suddenly you sell it for $2, and all of a sudden, after you sold it for $2, it goes up to $5. You're already at risk. You run the risk because you're lost already because you sold it so quick. Okay. The other way around is someone bought this share from you $2. Okay, and also that person that bought this share $2 from you, it can go suddenly. It goes down to $1. So you already lost. You're already at lost, because you bought this share $2 and it goes down to $1. Okay, how do you incur? How do you recoup that you are lost over there? So investing in stock market is something that that is risky either way. You are buying it, and you buying it is also, you run the risk of it. You run the risk of it going down. Someone's, you selling it, you run the risk of it going up. That you sell it now to this amount of money, you run the risk it might go up. So, and if it goes up, you'll be regretting, so why did I sell it so quick? That is the same thing applicable. So the person who is buying from you might buy that share and it goes down. Okay, he might buy that share $2 or ₦2, and that share goes up to 50 kobo or $50 or 50 pence, or I'm just giving you an example. So this is the reason why actually you need to be there in the long run. You need to make informed decisions. You need to invest in the long run, invest in long term. I invest myself as a value investor. I invest in the long run. I do the fundamental research about the company. I do the technical analysis. I read the financial statement. I follow this company bomber to bomber. I watch them in their management, in terms of what they are producing. I listen to news. I read, but also taking informed action, taking informed decision in terms of what I want to achieve. I want to achieve in terms of my investment portfolio. Because I invest in the long run. I'm not there just to run so quick to get money. No, I invest in just because I want to receive a passive income. I want to create a generational wealth for myself that will allow. So guys, welcome back guys. So what I want to explain to you is you need to find out really the reason why you want to invest. Okay, I'm investing in the long run, so that is actually the ultimate goal. Okay, I've shown you dividend I received 2019 and dividend I received in 2020 from the company that I invested here in UK and abroad. Okay, so the reason why I'm doing this is for, you know, to be financially free. Okay, but I'm not into rush to get there. I know I will get there eventually. So ultimately it's just for you to understand, find out why you are investing. Are you just there just to make money right now and move? No, I want to create a generational wealth for my family and also help others. This is ultimate goal. I make the informed decision because if you are doing day trade, you are incurring costs on daily basis. But investment you make right now, and I leave that investment to grow. It will appreciate in price, capital appreciation. But also there's something called compounding. Something called compounding is the dividend I received, right, in 2019. I use this payment and buy more of those companies that I invested in. That is what is called compound. You know, if you buy something today, okay, for 10 naira or for 100 naira, then you receive dividend maybe 5 naira on top, so it's now 105 naira. Then you use that 105 naira and buy more of that share, and within the next year that share will go up. They declare more dividends. You use, you know, there's chances that if we are doing this continuously, continuous evidence already shows by people who have done this for a long period of time that is compounding, you know, is where to go, is how to build wealth. So I'm not there just to do a day trading, is the question that I ask. But also I don't think it's good for beginner. You need to, you know, make informed decision, because investment is risky business which you need to understand. You work hard for this money, so you need to use that money, make that money work for you. Investing is in a dividend paying stock is a passive income. I do investment to receive a passive income. I don't do it just to get money right now and that's it. No, I do things in the long run. I do things, you know, for long period of time, you know, the benefit that I will receive for a long period of time, not just to do it today and move. No. If you are doing day trading, you are incurring, you know, fees on daily basis, charges on daily basis. But you are value investor, you buy a share and leave it. The next thing you do is just listening to news, reading financial statement, reading the statement from the company, checking inside, making sure that things are going as it should be, reading the news about that company, checking the dividend they declared, and make sure that you fill in all the necessary documents for you to receive that dividend. And because if you receive that dividend, you use it and acquire more. Excuse me. This is water. So this is what I'm doing. I don't think, my own opinion, day trading is not ideal for beginners. But also you need to know how much amount of money that you got, you know, for you to do a day trading or be a day trader. You are going there taking a lot of risk of crash. There's a chance you might crash. Than what is better or for you to go there nice and slowly to reach your destination. For you to reach your destination nice and slowly. I want to tell you what Benjamin Graham said. This is intelligent investor. I want us to look here. Benjamin Graham said that in this statement, an investor, right? He said that in our textbook, Security Analysis, we attempted a precise formulation of the difference between investor and speculator as follows. An investment operation is one which, upon thorough analysis, promise safety of the principal and adequate return. An investment, okay, is the one you done through thorough analysis. That promise safety of the principal. Promise safety of the principal is promise safety of the money that you invested in, okay, and adequate return. This is what he's saying here. Okay. So if your operation does not meet this requirement, then you are speculative. You are a speculator, which is you are day trading, and day trading is speculator. So I do investment based on this intelligent investor value investing by making sure the safety of my principal is maintained and I receive adequate return. Adequate return is by, how do you receive adequate return? It's by capital appreciation, but also by receiving dividend. Capital appreciation and dividend, passive income. So I'm not there just to do a day trading, but it's up to you to do. You can decide what you want. I work hard here in UK. I make informed choice. I invest my money for it to work a lot harder, because that is how to be financial free. That is how wealth is built. I invest so that my money will work harder for me to receive a passive income. It's pretty much like, you know, you buy a property. You know, people do it ultimately, but sometimes people might say, okay, let me buy this land, or someone might say, okay, let me buy this land and sell it after 2 days. There's a chance you might not sell it within that 2 days. It will stay with you. So that's the reason why you need to make sure that what you are buying, you have done the analysis, you have checked this company inside out, you have done the thorough analysis and know that, okay, what I'm buying is actually a good value, is a good company. They are paying a dividend, you know, the management team, there's a capital appreciation. It's likely that that company is doing well, the demand and supply is there. You are not doing it just to, I want to get quick money and sell it quick. Some people will do it fine. They might, some people would, you know, some person might do it like, you know, and it's benefit to them, but ultimately what matters is the investment you are making, the safetyness of it, the safetyness of your principal and return. Okay, so guys, this is actually the question I was asked. I thought to share this with you. Okay, like I said, it's pretty much like you need to find out why you want to invest, you know, the reason why you are investing. Okay, I want to also read something for you. Benjamin Graham definition of investment, right? An investment operation is the one which, upon thorough analysis, promise safety of principal, adequate return. You must thoroughly analyze the company and the soundness of underlying business before you buy its stock. This is one thing I want to tell you. Before you buy a share, you must thoroughly analyze it. You must thoroughly analyze a company, the soundness of its underlying business before you buy its stock. Before I buy any stock, I need to make sure, check the PE ratio, check the technical analysis, check whether it's a dividend paying stock, check the company, check how long it's been existing, read their financial statement, 5-10 years financial statement, check how long that company has been, check the demand and supply, what that company is producing before I put my money, before I invest in that company. I invest in the long run. I'm not doing day trading. Okay, that's another thing. Okay, the second thing is, Benjamin Graham says you must deliberately protect yourself against serious loss. You must deliberately protect yourself against serious losses. How do you protect yourself against serious losses? How do you insulate yourself against losses? The way you insulate yourself against losses is by you investing in the dividend paying stock, right? Investing in the dividend paying stock, you receive a dividend in this year and buy more of that share to protect yourself, to insulate yourself. Even if it goes down, if you receive dividend and put it back in that share, eventually capital appreciation, the company is doing well, you receive dividend, it's passive income. You are not actively involved in running the business. You are not actively involved. You are not working. If you check my previous video where I talk about passive income, you understand what it is. Receiving a dividend is pretty much you are home as sleeping. You are home sleeping and receiving income from the investment you made years back, 2 years ago, 3 years ago, 5 years ago, or 10 years ago. This life is about legacy you are creating for your family. It's about legacy you want to leave. I want to create a source of wealth to my family, to my friends and relatives. Even if when I'm gone, it's about legacy. People talking about it, that this person have share in this company, that their family are still receiving income from that. This is how wealth is created. It's not about you buying shares today and selling it. It's not really ideal for day traders or beginners. But it's up to you to make that informed choice. What I'm telling you is really by reading and putting it into action. Reading book is fine, but it's about you deciding what you want to do, taking a calculated risk. Investing in stock market is a risk business. But you must make that informed choice. You will need to make that decision based on your own principle, based on what your value, what you want to achieve. Okay. The other thing he said is you must aspire to adequate, not extraordinary performance. You must aspire for adequate return, not extraordinary performance. Day trading, you are doing it, you want to do extraordinary performance. Extraordinary performance might lead you to unsafe environment and for you to crash. Okay? Unsafe at a high speed is pretty much day trading. That is what it is. You are running at a high speed that is unsafe. So guys, I leave you with this thought. Okay? I do investment as I do investing slowly to build generational wealth. I don't do it just for me to do day trading. Don't get me wrong, some people do it and find it beneficial to them, but it's good luck to them. I do investment based on a long term, long run. I'm in there for long run. I don't chicken in and chicken out. Okay, so this is the question I was asked. I'm very passionate about it. It's about, I'm not a financial advisor, but it's something that I'm doing that is helping me. I'm there in the long run. I want to receive a passive income. This is the reason why I'm investing. I want to leave a legacy to my children, to my family, my relatives. So I don't do it just to, because I work hard to receive that money. I invest with my own money. I don't borrow to invest. Okay, I invest with my own money, right? So I take a calculated risk. I do informed choice. I do investment because of the freedom that I enjoy in it. I don't do it just to, for money. I don't invest it just for money, to get money today. No, I'm in it for the long run. And the longer you are in it, the more safety you see. The longer you are in it, the safetiness of your principal are in it. So you are there in the long run because you are receiving dividend, you are getting capital appreciation. Don't get me wrong, sometimes your portfolio might go down, but you know, when you check the PE ratio and check the company inside, that nothing have actually changed. It's just about news in the whole world. Or there's a thing that is going around now that, you know, the economy, we see ourselves or how things are at the present time. You see around March this year, almost the stock market, you know, went down completely. And it's coming up a little bit right now, but a lot of country actually going into recession. But one thing you need to understand is, if you check the company that you invested in, you have done the research, you know the financial balance of that company, you know how they are doing, you know that the management are working so hard and nothing have actually changed apart from the news or what is happening in the whole world. You just stick in there. You just stick in there. Okay, the good thing about it is, you know, as far as you are investing in the long run, you're investing for capital appreciation, you're investing to receive a passive income, you know, I'm sure you'll be fine. But you are investing just to do a day trade and chicken in and chicken out, you might crash. You are running at a high speed. So in my own opinion, someone might get me wrong, you know, but you just need to do your own research. I don't think it's a good idea for beginner. You need to take it easy, slowly, in order for you to reach where you want to reach. Don't run at a speed that will make you to crash, you know, or you crash without any, you know, any support. So guys, I thought this is the question I was asked. I thought to come in here to share this idea with you. I like the question. Drop any comment, any other question that you have, please. I'm not a financial advisor, but this is something that I'm passionate about. It's something that I'm doing that is helping me. Okay, all right, thank you very much indeed. If you are new to this channel, and if you are, please consider subscribing. Give a thumb up to this video, or give it a thumb down. If you like it, leave a comment, give it a thumb up or give it a thumbs down. Either way, it helps us in either way. Please, just I'm here to give a value to the community, support other people in terms of investment decision, what I'm doing, or telling you, sharing ideas, what I'm doing. Reading book is also fine, you know, but also when you read a book, you also need to understand to put that into action. Okay, read and assimilate and put it into action. If you read the book without putting it into action, you are just wasting time. So you just action is actually where to go. And the main thing is for you taking calculated action, taking calculated risk. Okay, so investment is about freedom. It's about freedom. The freedom I'm talking about is for you to spend quality time with your family, for you to spend quality time going on holiday, for you to spend quality time, okay, thinking what you need to achieve, spending time, use your freedom to stay with your loved one, use your freedom to spend time with your family, your relative. But how to do this is you must build financial freedom, build wealth. Building wealth is not about day trading. Some people might do it, but ultimately you just need to find out really the main reason why you are investing in stock market. You need to find out the type of investor you are. Day trading is not ideal for beginners. Some people might have other reason, but good luck to them. But for myself, what I'm doing for myself, I'm a value investor. I'm in there for a long run. I'm in there to receive a passive income. I'm in there to receive a dividend. Hardly I invest. Sometimes I might invest in a company that I know that they might go up in a value. Okay, you can do it just one off. You can invest in a company that you are being that you think that somebody else might buy from that company, and you receive capital appreciation. Like recently, some company like Diamond Bank was actually acquired by Access Bank. When that news was going up and down, a lot of people invested a lot of money in Diamond Bank because they have that news that that company is about to be, sold to Access Bank, or Access Bank is about to, buy that company at that time. So people invested a lot of money in that, and once that deal passed, a lot of people they get a lot of money because then Access Bank bought that share, quite high compared to some people bought Diamond Bank £1, example, at that time, and it was sold I think at £3 something. So it is something that you need to try to understand. If there's any news that is going, you want to go to that company for that particular reason because you hear a news, or you had a news that they might be sold to somebody, you might not make that calculated risk. But also you need to understand, are you going in there if that did not work? Will you still keep that share? Okay, so it's about you trying to find out really the type of investor you are, making informed choice. Okay, are you there in the long run? Are you just doing it just for to get quick money in a high speed? Okay, so it's really up to you, but just think about it. Thank you very much indeed, and if you are new to this channel, I'm saying it again, please consider subscribing. Thank you very much. I like your feedback. Please give us a feedback. Thank you, and stay blessed.